Hey everybody, welcome to Trading Capital's daily analysis video. Discussing natural gas in this video, I think the price action has just been very interesting and very fascinating from a technical standpoint. But jumping into a couple of the fundamentals and why I think natural gas has acted the way it has. Starting off with Friday, there were two key events that happened on Friday and are now behind us, in the sense that I think those were some short-term fundamental drivers that were keeping the price of natural gas trading in a very narrow range for the last 3 days. First of all, Friday we had options expiration. So many of the calls and put action in the markets expire worthless. The majority of them do, roughly 95% of them do. And who profits from the 95% of the call and put options that expire? It's the people that sell them, and the people that sell them are the institutions. So when we look at natural gas, the max pain area for natural gas is roughly in this range that natural gas has been trading in for the last 3 days. The range that natural gas has been trading in is a very tight range when you factor in how volatile the price action has been in the last few weeks of natural gas's price action, and let alone few months of natural gas's price action. So when you think about it logically, the max pain level is the level in which more people will lose options contracts on that specific price once the time frame expires. So the max pain level is right in and around this level. Reason being is you have a lot of bear cases to the downside, which obviously we are one of those bearish cases to the downside, but we're not playing the options market, so we don't have to have our magic number in natural gas that I think will hit. We don't have to predict the exact time or range it's going to be in at a specific date and time. So that being said, there's a lot of bears that thought natural gas would fall a lot faster, and there's a lot of bulls that thought natural gas would rise a lot quicker and still keep chugging along higher and take out its all-time highs. So neither of those cases happened, which means more options contracts expired worthless for natural gas by trading in this very tight, narrow range. And from another fundamental picture, with now options X behind us, natural gas can get more to its free price discovery, which without being propped up or suppressed in any direction via large institutions that are standing to make money in the short term on options. And roughly there was about 2.7 trillion in options expiring on Friday. That just shows you the amount of wealth that is on the line for retail and institutional investors. It's an incredible amount of people gambling and speculating in the markets. So the second fundamental factor that I want to discuss about natural gas is a lot of the payments from the European Union for natural gas energy went through on Friday, which means that Europe has now watered down their energy sanctions officially, and they're going to take a looser approach. And I think this really comes on the back of their GDP numbers having a declining outlook and forecast, as well as the Bank of England released a statement and said, we are going to be experiencing 10% inflation and a massive recession if we don't accept Russian energy to some sort of degree. So I think that's also been a really strong positive for us. And obviously, if they're buying Russian natural gas, it means that the supply gridlock, the overall fundamental bull case for natural gas, I believe is coming to an end, and it's reached its pivotal high. And I think it's now time for the cycle of natural gas to start going back to more of its cyclical cycles where it typically falls in the building season. And we're certainly building the reserves. And if Europe starts purchasing Russian natural gas at an extreme that's going to lower the price for their people, that's certainly going to put a tremendous amount of pressure on the overall bull demand case that natural gas has been riding for the last basically 2 years, and more specifically in the last 3 to 6 months. So ultimately, I do think natural gas falls a lot lower. I'm still sticking to that case because there are a lot of fundamentals. And then ultimately, the most important thing to me is the technicals, what they're telling me. They're really telling a clear picture, in my opinion. And what we're noticing here, again, we've been discussing this topping formation, this head and shoulders. It looks to be that we had our initial reversal candle, which closed within this long-term trend line. So that's our first signal. and it's kind of this, it's not a topping tail, but it is a reversal candle, and it was on an increase of volume in comparison to your previous 3 trading sessions. So that was signal number 1. Then we were looking for the confirmation of the downside, which early in the day this was rallying, it looked like it was going to break out, and it reversed and faded in the afternoon. And same thing over here, it was rallying and reversed and faded. So we've had now 2 confirmation down days. You also got a confirmation on a larger volume down day, so that's also a secondary signal. But ultimately, the daily chart is very fascinating because it is putting in that potential head and shoulders topping formation, which I do think is very, very likely to play out at this point, at least down to the neckline. Then we'll most likely have to wait for confirmation of a break in the neckline, and I do think it has a much, much lower price to go. So what I think could potentially be playing out here in terms of a pattern is I think we could eventually see a quick flush down to our neckline. And then ultimately, since you were trading in this parallel channel, you have a pivot high to pivot high to pivot high. So you have 3 pivot highs, as well as you have a pivot bottom here, you have a pivot here, and you should retrace back to that scene of the support zone. And then once you retrace that scene of the support zone, that would be your last hoorah bull rally fake out, in my opinion, that would suck in some longs, just like you've bounced up here, just like you've bounced up here. And then ultimately, I do foresee natural gas breaking lower. So that potentially could be a scenario that plays out. Again, it's very difficult to forecast what the exact price action is. But if this head and shoulders plays out, it could be a potentially very highly probable trade in our favor. And the daily chart just shows this beautiful symmetrical pattern that could be playing out to a T. But the weekly chart, in my opinion, gives me that longer term, more of a very convincing outlook that natural gas is going to be closing lower in the near term. And this is why we're shorting it. And I love including the longer term weekly analysis because it's screaming a failed breakout. And let me discuss why this is screaming a failed weekly breakout. Not once, not twice, but 3 times in a row. You have pretty much failed to close above this high. So this is your initial reversal candle where you got the signal. Big money or huge long-term bulls in natural gas were dumping their natural gas position. And the reason this is the first signal is because it was your initial weekly reversal signal, kind of your topping tail weekly, not an engulfing candle, but just a strong weekly reversal signal because it was on one of the largest volume days that it had to date. And then when you factor in this candle, you closed below this wick. You had this candle, which was your peak. You rallied up, but on a weekly basis, closed inside of this wick. Same thing, you had a flush down, huge bounce and reversal to the upside, managed to break this wick, but failed to close above that wick again on a weekly basis. And then this brings you to this most recent weekly candle, which pierced this candle high and again failed to close within this wick pivot. And then you also factor that on a weekly close, not only did all 3 of these last consecutive candles fail to close above this wick high, which shows that this on volume is your huge level of resistance, it also demonstrates that this longer term trend line here from November 2020 to this pivot high and to this pivot high, you have failed to yet again close above that on a weekly basis. So you had your initial all-time high, failed to close above it. Rallied, tested it, failed. Rallied, pierced it, failed again. So there's lots of indicators that, in my opinion, that are not only backing up the fundamentals, but the technicals are screaming that there's more downside in the near term. So I think we just need to hold on to our KOLD. The level is coming. We have been patient. We have been in this trade a little bit longer, but roughly we've been in it for 4 weeks. And the most I would hold a levered ETF is 2 months just due to the decay. And obviously the reverse stock splits, but we're fine. We're well suited to profit tremendously from natural gas, and when we do, it's going to be yet again a beautiful boost to our portfolio because we've been banking tremendous amount of winners as of late, and basically throughout the whole of 2022 we have just been profiting. My portfolio is basically up around 20% on the year, and some of you are probably up more. Some of you though that have taken those trades with me, and that's my swing trading profile. The day trading profile is doing pretty well too, but that's for my own personal endeavors at this point in time. But nonetheless, everybody that has been consistently trading with us using position management and risk has been able to beat the markets. When we factor in that the markets are tremendously down on the year, it's pretty proud. We should give our pat on the back. We've been thriving in some pretty uncertain, volatile times and pretty much the treacherous markets that we've seen in years. And I think we can keep printing these profits as long as we're smart about what we're going into and in terms of position and risk management. That has been the key to our success in 2022 while the markets have been slaughtered due to the precipitous fall that has been occurring in equities and bonds. And we'll discuss that in later detail. As always, thank you all for being members, and we will keep updating you on how things progress. Take care.